I published a new blog post yesterday, January 1st, 2026, discussing my trades over the past few days. A link to my blog post can be found at my profile page here at YouTube. I'm going to discuss in this video silver, which is in a parabolic price rise. I will cite some sources for my discussion in the more section below. Since Bitcoin started its bear market after going over 125,000 in early October 2025, silver and gold, two other alternatives to fiat currencies, have surged in value. Both precious metals have over a 2,000-year history as currencies, while Bitcoin is of more recent origin in that category. Silver and gold are tangible, are pleasing to the eye. Both the U.S. silver eagles and gold eagles are beautiful and artistic coins. I'm about to hold up a silver 1987 silver proof eagle, which I purchased from the mint that year. And this is what it looks like. It has the Walking Liberty design on the front, which was used on the U.S. mints half dollars minted between 1916 and 1947. And they're called eagles because there's a eagle on the backside. These coins are encased in plastic, which keeps the coin from tarnishing. They generally will sell at a premium to the spot price of the silver eagles that you could purchase that are not minted as proof coins. A proof coin is minted by polishing the die, which gives it the mirror-like image that this coin has. The Walking Liberty design was used on the half dollar until 1947, and that's a very beautiful design. I'm glad the Mint selected it for use on the front of the Silver Eagles. And the Walking Liberty design was replaced by the less artistic bust of Ben Franklin in 1948. The proof coin, as I said, is struck from a polished die, which gives it the mirror-like finish. And the bullion, and also bullion can be stored safely in their physical form, which I do in my safety deposit boxes at a bank, unlike digital currency that is subject to being stolen by internet hacks. For a long time in the United States, dimes, quarters, and half dollars had 90% silver, while the silver dollars had almost 100%. Higher denomination coins were made of gold. When the U.S. introduced paper currency backed by the full faith and credit of the United States in 1861 to finance the Civil War, most were convertible, if not all. I'm not a paper expert, U.S. currency expert by any means. Were convertible into silver for the $1 bills or gold for higher denominations. Humans just needed that convertible feature to accept paper over silver and gold coins. President Nixon, however, ended that convertibility feature of the paper currency in 1971. So if you took your $10 gold certificate paper currency to the U.S. government and asked for gold in exchange, you would not be happy with the result. The end of the convertibility of paper currency into gold and silver bullion started the era of fiat currencies worldwide, where the only backing of the paper currency was the full faith and credit of the U.S. government and other governments. For a long time, the primary uses of gold and silver were in coins and jewelry, but And that is the case now for gold, but not silver, that has become an essential and critical metal in multiple industrial uses. The primary reason is that silver has the highest electrical and thermal conductivity among the elements, making silver a crucial component in electronics, including solar panels, circuit boards, and electronic vehicles. Silver does have the most powerful antibacterial action as well, with the least toxicity to human cells. Industrial demand was about 491 million ounces in 2016 and is estimated at 678 million ounces last year. While there has always been investor interest in owning silver bullion and individual purchases of silverware and silver jewelry, the introduction of silver ETFs have led to a massive hoarding of silver to back the shares of those ETFs. In addition to the hoarding of silver coins and bullion, which I believe has been increasing by individuals over the past year or so, the silver ETFs have to own silver to back their shares. The silver ETF SLV last reported owning 16,444 tons of silver as of 12/31/2025, and there are other silver ETFs in addition to SLV. I've read several articles that silver demand has outstripped silver production for 5 consecutive years. A chart of the supply and demand can be found in an article published last November at the Silver Institute, one of the sources for information about silver, titled, quote, "The Silver Market is on course for fifth successive structural market deficit," end quote. I do not believe that the last $20 or so, and this is just an opinion, spike in the silver price is due to the factors that I just discussed, but to China implementing on January 1st, 2026, and this has been known for a while, export license controls on China's exports, which are generally close to 121 million ounces of silver annually. About 60 to 70% of the global trades of refined supply will require approval of China's government before being exported. Why is China imposing the export license requirements now? One possible reason is that China needs the silver for its own industrial uses. It is far from clear how much silver will be retained inside China that had previously been exported. But given the pre-existing world supply imbalance, any substantial decrease in exports will have a major impact on price, in my opinion. So it is important to review what China is doing on silver export licenses this year. My history of owning silver started around 1962-63 when I learned that the U.S. Government was going to remove 90% silver content of the dimes, quarters, and half dollars, with 1964 being the last year of production of those 90% content silver coins. The Walking Liberty half dollars were still in circulation then, as were the Mercury dimes. Both had 90% silver content. My simpleton approach, asking myself why would the government take the silver out of the coins unless silver was worth more than the coin's value, led me to use whatever money that I had at the time, which was not much, to exchange dollar bills for the change that my parents had of dimes, quarters, and half dollars that had silver content. I later sold those coins in September 2011 and January 2012. 2012, along with other gold and silver bullion which I own. And those were my last sales of gold and silver bullion. I have not sold any since. Snapshots are in my blog from that period. The price of 90% junk silver coins is based on the theoretical melt value of the silver in the coin. I see no reason to buy junk silver when I can buy silver eagles now. Also bought my first gold coin when I was 13, a common numismatic gold piece minted by the U.S. Mint in the 1880s, which was priced near the then fixed $35 per ounce gold price. It was illegal back then for U.S. citizens to own Krugerrands or Canadian maple leaf gold coins. I still have the coin that I bought back then. My last silver eagle purchases were at $7 per coin, and my last gold eagle purchases were in the $500 to $600 per ounce range. All of those coins are in my safety deposit boxes at a bank. I'm expecting a lot of volatility in silver and gold prices this year. The direction, uptrend or downtrend for silver is the most interesting to me because it has the potential of being more volatile than the gold price. And the price may be at least partially linked to data about what China is doing in granting or rejecting export licenses for silver. Other countries may start to hoard the metal in response to less silver available from China. The situation just needs to be monitored as the year progresses. I'm not making a prediction about the future price of silver here, but just identifying some of the data that will influence silver's price. In my blog post published yesterday, I continued to de-emphasize purchases of treasury bills at auction, buying just 10,000 last week, and to increasing my allocation to Tennessee municipal bonds with 4% coupons, rated AA or better, and available for purchase at less than par value. And I bought 10 of those last week. Dividend-paying stocks with yields greater than 4% at my purchase prices, exchange-traded first mortgage bonds issued by a utility, and equity preferred stocks. This relatively minor reallocation process is likely to continue as T-bill yields decline further below 4%.